Hello everyone, our group will talk about carbon tax, which is a response to global warming. Firstly, let me share a comic and some pictures with you to help you have a better understanding of global warming and its influence.
I might believe in global warming if I could see one thing that proved it. Just one thing, that's all I ask.
Obviously, this comic shows the hot weather. When it comes to the cause of global warming, we should pay attention to the emission of carbon dioxide. From this chart, we can clearly see the carbon dioxide accounts for a large part of greenhouse gases. And these pictures reflect its terrible impact on environment. According to the above information, it is obvious that reducing carbon emission is a good way to alleviate global warming. It is known that in America, different ruling parties have different regulations for global warming. The inconsistent regulations are inefficient in protecting environment and promoting economic growth. To cope with those problems, three American economic experts lay out a more ideal climate plan. The plan is built on four pillars. First, a gradually increasing carbon tax. The federal government would impose a gradually increasing tax on carbon dioxide emissions. It might begin at $40 per ton and increase steadily. Second, carbon dividends for all Americans. The proceeds would be returned to the Americans on an equal basis via quarterly dividend checks. With a carbon tax of $40 per ton, a family of four would receive about $2,000 in the first year. As the tax rate rose over time, so would dividend payments. Third, border carbon adjustments. American companies exporting to countries without comparable carbon pricing would receive rebates on carbon tax, while companies imposing from such countries need to pay fees. This action would protect American competitiveness and punish free riding from other nations. Fourth, significant regulatory rollback. After the imposing of the carbon tax, regulations which are unnecessary would be eliminated.
Now I'm going to evaluate this plan. First of all, this plan can strengthen the economy of America. As for firms, it will encourage them to do technological innovation and stimulate new investment. Because with the increase of carbon tax rate, it is hard for companies to make profits without transition. There is no doubt that in the long term, new technology that can reduce carbon emission efficiently will bring a lot of benefits to the companies. But in the short term, the cost of innovation is needed to be considered, especially for tight budgeting companies. As for forward-looking households, they will be willing to borrow money to make durable purchases that will reduce their carbon footprint. However, as consumers, the difference between the price of low carbon goods and the price of high carbon goods also can have a significant influence on the behaviors of consumers. The second benefit is that carbon dividends can help working class people. Because carbon dividends will increase the disposable income of the majority of Americans. Based on the estimation of the Department of Treasury, the bottom 70% of Americans would receive the dividends ahead. But due to the equal distribution of carbon dividend, some people who do not make an effort to reduce carbon emissions will also receive the dividend. So it will hurt the patience of low carbon people to keep their behavior. Moreover, if the factories cannot bear the burden of carbon tax, their workers will face the risk of unemployment.
Well, the third benefit involves shrinking the overall size of governments and streamlining the regulatory states. Under the plan, an array of energy-related regulations would be eliminated, which could reduce government bureaucracy. Many financial and personnel resources could be freed up and allocated to administer and comply with other programs. A gradually increasing carbon tax may eliminate the rationale for more heavy-handed regulations of greenhouse gas emissions in future years, but it still needs time to see whether the plan is effective enough to replace many other energy-related regulations. What's more, transparency of carbon tax revenue and dividends distribution is essential to be maintained to ensure that the carbon tax proceeds should not be allocated to other unrelated purposes. And the last benefit involves creating a more stable world. Currently, our reliance on fossil fuels contributes to a less stable world and makes us vulnerable to a volatile oil market. Carbon tax and dividends would help prevent the destabilizing consequences of climate change, and a transition to cleaner power sources combined with new distributed storage technologies could also strengthen national security. However, while some countries like Canada are implementing carbon tax and dividend, some other countries, especially developing countries using carbon resources in electricity generation, do not support this mechanism because of the concerns that firms may relocate and workers may lose their jobs. But no matter what mechanisms they use, all the countries are making efforts to contribute to a more stable world.
Now I will introduce the takeaways for Singapore. According to the budget statement of Singapore in fiscal year 2017, Singapore government is going to introduce a carbon tax on upstream entities and use the revenue to fund the measures of firms to reduce emissions. The tax rate is about 10 or 20 Singapore dollar per ton of greenhouse gas emissions, and subsidies will be given to smooth the transition. At the same time, the former lump sum tax on diesel vehicle will be transformed to a value-based duty at 0.1 Singapore dollar per liter. More details are being discussed until now.
Now let's come to the takeaways for Singapore. The first thing is to keep the carbon tax rating. A fixed carbon tax is not enough since firms can easily transfer this additional cost to consumers by prices, and the companies will have no incentive to take new, cleaner techniques, especially when the new one costs a lot. But a raising tax or promise to raise tax will force firms forward because they cannot bear a much higher tax with current techniques and emissions. Then it is about subsidies. Subsidies are necessary to help the households during the transition, but you should not give subsidy according to the price growth, since such a subsidy will reduce people's willingness to live a greener life. Equal payback may be an excellent choice because it punishes high carbon emission persons and reward low carbon emission ones. Finally, it is the border adjustment. Singapore depends highly on international trade, so the tax on exported goods should be paid back to ensure the competitiveness. At the same time, the carbon tax should be put on imported products to encourage residents to choose greener goods. Also, this will eliminate the disadvantage of Singapore goods due to the carbon tax. That's all. Thank you.